My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. If you want to make friends, I'm just trying to save you some money. My job is not just to entertain, but to educate, teach, put these days in context. Call me, 1-800-743-CNBC. Tweet me at Jim Cramer. Well, there you go. Another one-day bullish wonder. I mean, that's how you got to look at things. These big runs like the one we had yesterday. Because today's repeal, Dow plunging 404 points, S&P plummeting 2.37%, NASDAQ nosedive 3.08%, was a painful reminder
the house of pain.
That you can't pay up for anything in this market until the Fed's done ruining it, or tightening it if you want to be more, say, refined. It's just not worth the risk in a market this fragile. Stocks fall apart on any number of things. A tick down in oil, a tick up in interest rates, a slight gain in the dollar. I mean, that is a brutal gauntlet for any market to traverse. And not only that, it's counterintuitive, because it is good news for inflation when oil goes down, and inflation is the reason why we are in such a jam to begin with. As I always say, we're stuck in this bear market until the Fed gets this economy where they want it to go, a place with much lower inflation, even if it comes at the price of much slower or no growth. You can't fight the Fed. Can't fight the tape, can't fight the Fed. And anyone who tries does get crushed, even if they make some money in one day, like yesterday. Of course, it doesn't happen daily. Sometimes you get a day where it's so obvious, like yesterday, that too many people were betting against the market and not enough real sellers surfaced, allowing us to rally like we did in Thursday's session. But it didn't mean the sellers vanished. It just meant they were taking a temporary breather. I think they gathered themselves, were shocked to see that the market was up yesterday, and came in and flooded the market with sell orders. Yeah, that's what happened today. Oil went down a bit, dollar rallied, and they unload on all stocks, especially tech, which is the most sensitive to the dollar and crude oil. I told you it's counterintuitive. And then rates did ultimately go higher, too, and the selling grew even more intense throughout the day. It is a nightmare. You just can't build on quicksand. So we have to ask ourselves, will next week be any different? I think we need to go to the game plan with an eye. And I have to tell you, it is a jaundiced eye to how this market doesn't seem to have any staying power, because so many people went out and so few people really went in. Knowing that bonds now offer a much more competitive alternative to stocks. Look, you're still getting that 4.5. I told you I like that for the 2-year. Monday starts off with Bank of America. Now, if it's as good as Wells Fargo and J.P. Morgan were this morning, maybe the financials can actually fill the gaping leadership vacuum in this market. Remember, it was led by tech for a very long time. Now that just takes us lower. Bank of America has a gigantic deposit base, so they should be able to report a terrific number in this environment. But it might not matter to the stock if the dollar or bonds or oil go in the wrong direction. I know it's plain silly, but it's the world we're in. Tuesday, we might get one more financial that could be interesting. Goldman Sachs, where I used to work. It could be a tough one because so much of Goldman's business is what we call transaction-oriented, not savings-oriented. And there simply haven't been a lot of transactions this year. Witness the not-so-hot quarter from Morgan Stanley this morning. Now, I'm still looking for a good bottom line number from Goldman, though, because CEO David Solomon has taken quick action to stem the bleeding from the decline in his capital markets business. Plus, this stock is crazy cheap, maybe the cheapest I have ever seen it be. Now, Johnson & Johnson reports, too. And I expect it to be much more of an intro to the post-breakup Johnson & Johnson, the low-tech consumer product business, think Band-Aids, and the high-tech medical device and pharma business. I think this breakup is going to unlock a ton of value, which is why we have a big position in J&J for the Charitable Trust. As I said in yesterday's Investing Club meeting, which, by the way, you should go listen to, because I think it was pretty funny. Got a lot of positive comments. It remains one of my favorite stocks. After the close, we get some long-awaited results from Netflix, where they'll likely tell us more about their cheaper ad-supported tier. Right now, it sounds like they'll have a radical number of commercials, but I think they have enough horse sense to avoid going overboard. Wednesday, we get a number that's hard to interpret, and that's housing starts. Get this, I've been working on this all day. I can't tell that we need a lot more houses so the price of homes comes down because of supply, or a lot fewer because we mean that the builders are very worried about housing and they know the business. But here's what I do know. Unless we get more houses for sale and prices break, the Fed will keep tightening until the buyers disappear and the sellers sell at any price, which is their ultimate goal at the Fed. Procter & Gamble reports before the opening, and everybody tells me it's going to be horrible. The stock's been miserable. Hey, maybe they're right, but I'm betting the stock will go up anyway because there are so many short sellers betting against this one. We own it for the trust because we think it has fallen too much already, and also the headwind of commodities is about to turn into a tailwind. After the close, we hear from the most closely watched company in the universe, and that is Tesla. Yeah, Tesla. Now, in some ways, Tesla kind of reminds me of Bitcoin. It's come down to a level where the buyers won't stop coming in to support it. I think they'll be out there full force no matter what Tesla reports. I actually care about the numbers, though, and I think they'll be great because Tesla actually has inventory to sell, and they don't need to advertise it. But the stock's become a real disappointment. Here's a shocker. Did you know that Tesla's down 41% for the year? We also get results from another conundrum. That's IBM. I don't know whether they'll be able to put up the numbers they need to get the market excited about this one. Management strategy, I think, is a sound one, betting heavily on a hybrid cloud and analytics. But that's become a hated sector. I expect to hear a lot of whispering about the size of that dividend, which produces a 5.4% yield. That's very high for a tech stock. Maybe too high? The most important quarter of the week may be from a little one that most people don't know, and that's Lam Research. Now, I want to introduce you to this because it is the best semiconductor capital equipment maker out there. You need their machines to make semiconductors. This industry has become in the crosshairs of the Biden administration because they want to make it more difficult for the Chinese military to manufacture high-tech chips. If Lam says they're seeing cutbacks similar to what we heard from Applied Materials, AMAT, this week, then the whole semiconductor world is going to have another move down. That's what it doesn't stop. It just doesn't stop. All right, Thursday we hear from AT&T. Now, I want so badly for it not to be disappointing because so many people still own this from the old days. Can they pull it off? They haven't yet. Maybe this time will be different, but I'm skeptical. Down here, though, at 14, I can't be as negative as I was much higher. And I should have said I can't be as right as I was because, man, was I ever right. I took a lot of heat on that one. That's okay. I never mind taking the heat. Many are worried about that commerce is slowing because of the Fed's aggressive rate hikes. But you know who has their finger on the thriving economy or not thriving economy? I say it's a big railroad like Union Pacific. And I added this to this because I think it's really important to know how the rails are doing. I am worried about weakness because it will reverberate through the stocks of their customers, so I did put it up there. But I am, I'd say, a big believer in Union Pacific anyway. Now, Whirlpool intrigues me because it's got a European business that is maybe for sale, and it could be worth a giant part of the whole company. If they sell it, the stock's a massive buy. That said, Whirlpool's a dog of late because higher interest rates dampen the renovation business. It is just real cheap, though. Okay, finally, we end up here Friday. Three key large companies, Verizon, American Express, and Schlumberger, often mispronounced Schlumberger, the big oil service outfit. Verizon trades terribly. Its stock is signaling that the business continues to wilt in the face of tough competition from Cramer fave T-Mobile. American Express stock has been dragged down by the credit cohort, yet I think it's the best in class, and I think we'll have a good quarter. Finally, let's end on what could be the best quarter, which is SLOB, S-L-B. It's oil. If oil stands pat, there will be a new investment cycle that will spur tremendous momentum for this great quarter. This, by the way, was one of the single best quarters we had in the previous reporting season. Bottom line, there are dozens of other important companies reporting this week, but you need to understand that in this environment, individual companies aren't the only thing that matters anymore. The market's dominated by the tick, tick, tick of bonds, oil, and the dollar. So remember, if we have a big up day like yesterday, that is a chance to do something sell. Because there probably won't be any follow-through. That is indeed the story on the bear market of 2022. Suzanne in Minnesota. Suzanne.
Hi. Oh, this is great. Have you ever been to Minnesota?
To where?
To Minnesota.
You kidding me? I've been in every aspect of Minnesota. I got lakes there, and I was there for the Super Bowl. I was there in I was there for the greatest day in history when the Eagles won. So I'm proud Minnesotan.
How about Bob Dylan's hometown?
Highway
you ever been
64. I hitchhiked on Highway 64. I'm all over him, too. Bob Zimmerman back then. What else? What else?
Well, I want to know if you drink lots of coffee. I'm wondering if I should buy
No, I had a
Starbucks.
Dunkin' Donuts later in the afternoon because Ben Stoto said, let's break the whole Starbucks orthodoxy. What's going on?
I don't know. Do you think I should buy it?
What? The Dunkin' Donuts? That's private. Oh, Starbucks. Yes! Yes, I was just kidding. I mean, I just did that just to irritate Howard Schultz for a few jokes. I think Starbucks is very inexpensive, and you should buy it. And thank you for those nice Minnesota comments. This market's dominated by bonds, oil, the dollar. So remember, if we have a big up day like yesterday, take some chance to do some selling. On Mad Money tonight, the CPI has become one of the most important measures in this market. But how well do you really understand the data? I'm pulling back the curtain on the numbers and sharing all you need to know to become a better investor. Then earnings season, yes, has officially begun with the big banks offering up the reports. I'm running through the numbers, discussing what it should mean for all the sector, including Bank of America on Monday. And oil continues to be one of the most watched corners of the market. But amid a host of headwinds, what can investors expect for the commodities future? I'm discussing with an oil expert, Rusty Brazil. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.